Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Gareth, it's great to see you again.
It's great to be here. Thanks for having me again.
Yeah, it's always a pleasure having you back on Wall Street Silver. So, Gareth, silver and gold have seen an interesting breakout this past month. Has precious metals sniffed out the Fed pivot? What's your thoughts?
Yeah, so I do think that there's something to that, and I think the bigger thing is the dollar, right? So we've seen the DXY top out, and as soon as the DXY topped out, that's when gold and silver got this awesome bid. And so in 2022, earlier in the year, we were seeing silver and gold go down with asset prices overall as the dollar went higher. And I think one of the things to take away from that is that even when the dollar was up 20%, gold was only down about 7% on the year. In normal markets, you should see a inverse correlation, meaning it should be dollar up 20, gold down 20. So the fact that you only saw it down 7 at its lowest point, to me, was a bullish indicator of big money buying in. And now we're starting to see the basic compilation of that, where gold and silver are both making nice moves up.
Do you like now we've seen Powell, he did the 50 basis point rate hike. Do you believe this is it? Like a lot of people are saying that he's gonna, even the Fed saying that they're gonna continue to be hawkish in 2023. Do you believe this is their last rate hike or they're gonna continue?
So I think there'll be one more, and it's going to be 25 basis points. And I'm big on the symmetry of everything. So we started out with a 25, then a 50, then 475s in a row, then a 50. So it's kind of like coming down the opposite side of the mountain. And so it
Right.
leaves us with one more rate hike of 25 basis points, probably early in 2023. I think the key here is understanding that when the Fed makes a statement, they have to remain extremely hawkish. If
Right.
they show any sort of like wavering nature, the markets rip up. We then see, people feeling wealthier. You get the wealth effect because their stock portfolios are up, their asset portfolios go up, and therefore they spend more money, which then makes it harder for inflation to come down. So even if the Fed internally is saying, all right, we may only do one more hike, they have to act like they'll do 10 more just to keep the market in check.
Now, Gareth, CPI figures came out this month as of December 13th. What does that tell you, and where do you expect things to go into 2023?
Yeah, so we definitely saw the CPI number come in. We saw an initial rally in the markets, and then kind of
Hmm.
the Fed slammed that right back down. And I think one of the things to keep in mind is that whenever you have high inflation, the first leg of reducing inflation is always the easiest, right? So going from 9% to, let's say, 5 or 4%, that's the part that's easy and quick. So I think, again, we'll be at 5 or 4 by, probably by the end of the first quarter of 2023. The problem is going to be that last little bit from, let's say, 4 back to 2. And my guess is we're going to really struggle to get that under control, which is then going to handcuff the Fed from being able to stimulate when we do go into a recession in 2023.
Where is Gareth putting his money right now?
So I
With all the
actually,
turmoil.
I'm a big buyer of gold. I think buy it on pullbacks right now, and I think again for me, it's shorting the S&P. We've already seen a big collapse just over the last few trading days.
Mhm.
I'm not necessarily endorsing chasing it at this point. Wait for a bounce, but then look to short it. I really do think that the S&P 500 is going to really struggle in 2023.
Now, Goldman Sachs, they just, and many other banks, not just them, they came out this week and this past month, and they're laying off not just a couple hundred people, Gareth, they're laying off thousands of people, and a lot of them are from the mortgage sector. When you see that, what does that tell you? Is the recession already here?
Yeah, I think the big thing is that there's this lagging kind of recession aspect where the jobs numbers, right? So you had these companies it was so hard for them to find workers.
Right.
They had to tried their best. They had to raise wages. And so now a lot of companies are very hesitant to lay off workers, but we're starting to see that change. We're starting to see these bigger firms, which have the ability to do more analysis on the labor market and future demand and recessions. They're starting to say, okay, listen, we are going to go into a recession here. We need to start laying off people. So I think this is a kind of a coming wave where you're seeing the big players like Goldman, Meta, these bigger players, they have the analysis and tools to see this coming. The smaller businesses, they haven't seen it yet. They're afraid to lay these people off just in case we don't hit a recession. And I think that'll be the next wave, probably later in 2023. So it's coming. The jobs numbers are always a lagging indicator. It's always kind of last to fall, but it is going to come, and it's going to be nasty, in my opinion.
Well said. Now, a lot of the major markets are in disarray, everything from crypto to even stock market. From where we are right now, Gareth, can you see another 20-30% drop in the S&P, or is the
Yeah,
bleeding done?
no, so that's exactly what I'm projecting. So I think 2023 sees the S&P 500 down at least 25% from wherever
Wow.
we close at the end of December. And I think this is going to really be a year where the market comes to a reckoning that we've been addicted to Fed stimulus.
Hmm.
Now the Fed, even if they want to stimulate, they're going to be too scared to, because the risks of kind of getting this hyperinflation going again. And the investing public is going to look to the Fed and say, hey, we're in a recession. Can't you guys print us out like you've done for the last 12, 15 years? And the Fed's going to say, sorry, guys, we still have 4% inflation. We can't risk that, because we might then see inflation jump to 20%.
Hmm.
And then that kind of realization is going to make a major repricing in risk assets. And it's going to be, again, at least 25% down in 2023.
Now let's talk about the FTX fiasco. A lot of people are obviously not happy at all with what's happening with FTX, and they're pulling their money from these exchanges. Binance now, you've seen like it was over $3 billion, people pulling their money out of that exchange. Do you believe people are shifting now from cryptos and like not as a whole, but some of it moving to precious metals to actually have real hard assets?
Yeah, I absolutely do think, and I still remember everyone making fun of me when I was, big on gold at the end of 2022 or 2021, because everyone was like, "Oh, crypto's the place to be," and then it
Yeah,
turned
that's
out,
right.
as we know, right? Gold is flattish on the year, give or take, while you have crypto down something like 50% or more. So, I mean, I think this is kind of the beginning of the last bearish move in crypto, where you're starting to scare out the retail crowd, right? So you had the retail crowd, the hodlers and all that. They've been kind of holding tough this whole move down. Now they're starting to get scared. What's
Hmm.
regulation going to be? Which exchanges are going to go bust? All these type of things. And that's the dead indicator that we're getting closer to a bottom in the crypto market. So I actually do think there's a place in the future for Bitcoin. I think it's a digital gold type asset. I'm not sure about the other cryptocurrencies, but I think, again,
Right.
you still see more downside in Bitcoin, probably sub 10,000. But I do think it's a buying opportunity at that point.
What's your personal thoughts, Gareth, on FTX and everything? Sam Bankman-Fried. What do you think is going to happen? Do you think he'll get any jail time or he'll
I,
walk?
I do, right? I mean, politically, it's now the thing to do, right? I mean,
Right.
once enough retail investors get upset about something, then the politicians finally act, which is part of the issue with regulation too, is they'll finally start to regulate a little bit, which I actually think is needed. I mean, you don't want over
Right.
regulation, but you need regulation that creates transparency. It's a horrendous situation. It's just another black eye for cryptocurrency. But in a weird way, it's like, if you look back at past cycles, right? I mean, in various cycles, we've seen Enron, we've seen WorldCom, we've
Hmm.
seen Bernie Madoff, right? When you go into bad bear markets, there are bad players that get exposed, and it's usually kind of a way to make the sector stronger, if you will. So as bad as it is to go through, I actually think it's kind of a growing pain that's actually a longer term positive.
Hmm. Is there is there any similarities that you're seeing now, Gareth, to the 1929 stock market crash, or is there any
Yeah.
similarities?
No, I've seen some weird and freakishly strange similarities. Let me just show my chart here. I want to show
Yeah.
you guys this, because I think it's really worth noting. So this is the chart of the S&P 500, and if I flip over to my weekly chart, we can clearly see that this was the dot-com bubble, the
Hmm.
collapse, the real estate bubble, the collapse, and then obviously Fed started stimulating right down here, and this is the resulting move, like this just humongous move to
Jeez.
the upside. And what I think is so fascinating when you look at charts, so let's go to the Dow Jones Industrial Average, and we'll flip over to the monthly, and we're going to go all the way back to the 1920s, right? And we're going to take a look at the similarities in charts here. And I think this has to be noted, right? So you had this same sort of move up, down, and then this monster run. And by the way, in the 20s, it was called the Roaring 20s. what we saw was lending standards really dropped. Everyone was just lending money. People were buying on margin. I mean, you saw it was almost identical to the same things you're seeing now. In
Wow.
addition, what's really kind of interesting is that in the teens, the 19 teens ish, you saw
Hmm.
the dawn of the car, which enabled people to go out and really drive distances to go shopping, to do different things. And you also saw the dawn of electricity, where it became a common household thing to have electricity. And that also enabled people to do things at nighttime where they wouldn't normally be able to do it. So what it did was
Right.
it really created this consumer spending bonanza. Well, if you go to the basic, like the last 10, 15 years, even 20 years or more, you've seen the consumer. We had Amazon. Now you could shop from your home. You could sit in the comfort of your home and shop. And I think it's just so fascinating to kind of see how that's all played out. So it's very, very similar in that respect. And I think you can't, you can't deny the similarities in that respect. So yeah, very, very interesting in that way.
Yeah, that was the really interesting similarities that you pointed out. Do you have, when you're purchasing gold, Gareth, are you purchasing like bars, coins? Are you purchasing like certain miners, producers? What do you go after?
Yeah, so for me, I always have a little bit of physical gold on hand and physical silver, right? I always view it as like it's a good thing to have life insurance. It's a good thing
Hmm.
to have health insurance. If tomorrow we woke up and we had, the banks were closed, this internet was down, your cash may be worthless. It's good to
Which
have
is
the
which is
physical
very
metal.
possible.
Yeah,
Which
yeah.
is
There's
very
inevitably
possible.
there's going to be some sort of terroristic attack, right? I mean, on the grid, on things like that. So I'm a big believer. It's not a whole lot. It's not like I hold millions of dollars in gold, in physical gold. I definitely don't. But it's enough where in that situation it could get me and my family through. And then for the rest of it, it's more this type that I could be in and out of very quickly. We know
Hmm.
buying physical and then selling it again is not the easiest thing to do. So I'm a big fan of like you have some for safety and emergencies, and then the rest is in the form of the GLD, the GDX, which is the miners, things like that.
Hmm. Yeah, in Lebanon, you can't even like there was a bank run for the longest time. You can't even go get your US dollars from the bank. It was only like a limit of $500 or $1,000 a
Wow.
day, and you couldn't even get it. So it's and they don't even use their own currency. They use US dollars because their currency is just devalued to the point where it's so yeah, absolutely, Gareth. It could happen here.
Mhm.
But we want to really appreciate you for coming down Wall Street Silver, Gareth. It's been an absolute pleasure. It's every time you talk, like it's a huge pleasure. So thank you.
Oh, thank you so much. It's really a pleasure to talk to you as well. Thank you and have a great day.
All right, take care, everyone.